Hey, this is Sasha Evdokov, and welcome to another episode of Let's Talk Stocks. Now, today's episode is going to be an interesting one because it's going to really be a social media episode. So I want to share with you some thoughts about social media, trading social media or watching social media. And this applies not just social media, this applies to the news as well. I believe that social media, along with news, along with just general information online, is helpful to get you started in trading. And what I mean by that is it's helpful to open your eyes up to new terms, new vocabulary, people's mindsets and thoughts. But unfortunately, one of the major problems, one of the huge, big problems when it comes to social media and this news input and all the other avenues of information, including the one that I am giving you to right now, that you're listening to right now, is that sometimes it warps your mindset, it warps your position, and it sucks you into thinking and believing a certain way. Now, for me, my goal usually when I'm teaching, educating, when I'm sharing thoughts and concepts is my goal is to take you out of your own brain, kind of suck you out of that brain and start looking at things from an outer perspective, kind of like looking at yourself from the outside view. So that's really my initial goal for you as you listen, watch, and learn from me. Now, I think it's still beneficial for you to learn from other sources, but the problem, again, is that you get sucked into them too much, especially when you're new. When you're new and manipulated, it's kind of what happens when kids are young and they get taken advantage of. They get manipulated because we're just young, we're naive, we don't know and understand. And this is how sometimes there's a lot of problems with kidnappings and things like that, where kids get, sucked into a car with strangers. So because they don't know better, they weren't taught better, or they weren't taught that at the time. So for you, this is what is going to happen is as you start looking at mediums like stock twits, like Twitter, YouTube, all the different channels, you'll get sucked into different theories and concepts. And in part, that's good because you're going to learn and evolve to some levels. You'll learn and evolve and gain new knowledge and insight. And this is what's going to shape you as a trader. But once you get to a certain point, and I can't really tell you exactly where that point is, you're going to have to make that determination. Once you get to a certain point, a level to where you understand the basics of trading, the base concepts, or figured out somebody that you can relate with, you need to just stick to that one or two or three people, or those one or two or three companies that really focus on teaching you, educating you, and so forth. Because if you don't, you'll get a lot of influence happening from other sources. So what I want to do is take a look at just stock twits and how things are going, and along with social media. By the way, if you want to connect with me on social media, just go ahead. The social media channels that I use Hootsuite to do a lot of the posting. Is just connect with me on Critical Charts on Twitter. That is probably the best for a live event or a live mention. And then YouTube, of course, if you're doing something a little more just a commenting on the video. I do not hang out on stock twits really because they don't have a panel in Hootsuite. So for me, most of the time when I'm connecting, it's to connect outward. So for example, typically go ahead and post out and connect to people on the outward side, meaning I post into stock twits and Twitter, but I don't interact, and I won't go out of my way socially in the sense of let me just go and interact and chat with people on a network. So for example, all these people that are chatting here on stock twits, I don't go out and start commenting and interacting with people. I don't have the time for that personally. But if you'd like to ask me questions, absolutely go ahead and ask me a question. For example, on Twitter is great. YouTube is great. You can, of course, send me an email if it's a more detailed questions, and I'll be happy to get into that. And and then answer them because, for example, when people ask me questions on Twitter, it just shows up right here. I can just go ahead and do a quick reply and I'm done, and it's all right here on this dashboard. But with StockTwits, they don't have a dashboard integration, so I can't really do that. So in either case, let's go ahead and just take a look at some of this influences and how this really works within trading. So here I'm looking at the SPY, which is a very heavily fed network when you talk about news or comments and so forth. And as we start looking through the spiders, you'll notice that there's a lot of people that mention what they're doing, what they're acting like, behaving, their thoughts on the market. There's a lot of input of information. It's just constant feed and a constant stream when you really look at it. So as you keep scrolling through, you'll see some people post some charts. You'll see some people note that they're bearish, like here, bearish. And then this also correlates to how the market is moving because, you'll also notice people here talking about buy the dip. Other people saying the SPY is rolling over. But if you go down and when the market was acting differently, you'll see other people read the health of the market, bullish. This person's bullish, and it really comes down to everyone's different opinion, their view on the market, their stance, where they're positioned. But the problem with this is you never really know where any one person is positioned or how they're positioned. They don't really tell you specifically that I typically position for 2 to 4 weeks or 3 to 6 months. That's my outlook, and that's why I'm bearish or bullish. Now, you can, in theory, go into, like here, buy the dip, free money here. You can go ahead and, click something and see, their professional equities, position trader, but that doesn't mean they're really a professional. Sometimes what you might notice is certain traders, and I don't really know, but let's just find or click a few. You'll notice that here, this guy is bullish here at 10:11 a.m. And when you look at the overall market, if you look at the S&P, you can see that here on the daily, we're actually heading a little bit lower. And if you look at the S&P, we're down about 6 points, and this guy is bullish. So, but I also look at, okay, they joined StockTwits in 2016. Okay, does that mean anything? Yes and no. Novice, again, this is something they can fill out themselves. So whether you choose to listen to them or not is totally up to you. It really just comes down to, again, your personal preference. For me, I registered a while ago on this StockTwits actually in 2011, probably one of the early people here. So it's been quite a handful of years, but I don't interact as much. So you can see I don't have a lot of followers here on StockTwits. I don't share a ton of ideas. I'll post some really more key and important concepts, rather than socializing. But again, you have to remember that this is a social network. So when you start seeing all this feed, all this news, in the end, you have to determine what is important or critical for you. Now, you can look at individual stocks where people are talking about stock-specific items and what they're doing, but you have to determine what your plan is, because this person's plan or that person's plan or that person's plan, is going to be completely different than your plan. Their risk strategy, their account size is going to be different than your account size. So you have to really hone in at your own personal strategy. And although this may give you some, I don't even know, I haven't really been on this website that much, although this may give you some insight to what's going on, what's happening on the market and what people are thinking, typically the majority of traders are wrong. So it's almost funny to do the opposite of what many people say if you start looking at some of these streams. So you need to create a plan for yourself before you're getting into trading the markets and trading these kinds of markets, because all this information is going to confuse you. You'll get a chart here, you'll get another chart here, but many of the times when people are doing a lot of live interaction like this on social media, a lot of it has to do with more day trading, and that's one of the difference and things. And I'll show you an example here shortly, just some people that interact with me, and show you why they look at what they look at, and they just don't know me personally and they don't understand what my trading plan is. So they assume that I am incorrect or wrong, and they also assume different things. So it's very tough to really get a true connection with someone on social media. So if you're trading this way, my big warning, hands out, big warning, that you want to have your own plan in mind before you're looking at these streams. So stop looking at social media if you're already aiming to trade and starting out, because it's only going to confuse you. If you're brand new, you don't know about definitions, terms. If you're just, let's say, less than a month into it, social media is a good way to start looking at articles, discovering websites. People might point out things in charts, and it might allow you to see new ways of drawing things on charts. But after that point, if you're trading less than, let's say, if you're trading and you've been trading and studying the markets for 2 months to, let's say, 2 to 3 years, you probably want to stay away from social media because it's only going to confuse you, at least for these types of social medias. Once you have your own edge, your own core, your own system and strategy, then by all means interact. Now, if you're asking questions in here, for example, the appropriate way I would say is go ahead and ask a question. Why are you bullish? Why are you bearish? Why are you making the decisions that you are making the decisions? Where are you taking profits? Where are you, and the problem with that is you really have to interview almost each trader to see how they relate to you. So that's kind of very time consuming because, other people will say no point in even trading this, such a total joke. Longer it stays here, we're going to get a massive breakout to new highs. So there's a lot of confusion that happens. Some people won't even trade these types of markets because it's not for them. Other people do fine. So again, really comes down specifically to you and your trading style. So that's kind of my warning to you, is that if you're just the first month, you're fine with social media because you're getting there. But after that, if you're using social media, you really want to ask a lot of questions. Don't be scared to ask questions. Why are you doing this? Why are you thinking this way? And some people may really just put a stop to you. They might hate your questions. They're like, why are you asking so many questions? But that's how you learn. That's how you get better. So that's one of the things that you have to keep in mind with social media, is that their outlook is different. So for me, when I use social media, it's to interact with other people. And I'll show you something that happened here this last week. Again, we'll use Michael Perry because he's interacting with me, and I'm sure he's going to be fine with me using some of the things that he talked about. So here, he talked about buying Apple, talking about Apple. Again, this is public on Twitter, so you can follow this conversation on Twitter. But to cut out the noise, I've talked about this Apple trade right here, and you can review this. The long story of it, or the short summary behind it, is that when I tweeted this out, talking about Apple here, let me just see where it is, my stream. On my profile here, here we go. Here, new critical charts. Added a video. It should be somewhere over here. Free book. These are all my messages. And here you go. This automatically gets fed from my Twitter feed. So here's where I talked about the Apple trade. Was May 26, right around 3:40. It's posted by Zapier. So again, we zap those right in here. So it's not really that I'm conversing with people on StockTwits. It's just it gets posted right away into StockTwits. So in either case, I mentioned it may attempt to fill the gap at 103.90 and then roll over. Still popping on weak volume. Do not buy the hype. So don't buy the hype. And that's basically was my thought on May 26th, 340. So if you look at the chart on Apple and we take this Apple chart here, you can see here's the day in May 25, here's May 26. And you can see that right after May 26, we start rolling over right there. And this stock's already had a pullback of about almost $4, and we're still continuing lower right now as I look at it. So my point here is not to just discuss or talk about myself. That's not the point. My point is to show you how people see things differently. Okay, so for me, the reason why I said this, again, those of you that have been following me for a while know I look at the bigger picture. It's not about crumbs, it's not about pennies for me, because 10, 20 cents move here and there's chump change. Okay, it's not a big deal. But when I start looking at the bigger picture here on the weekly, I know that the ABCD pattern has completed. Okay, so I already saw this. We're already overbought in the Apple trade way up here. We can have a pullback to this swing level and then bounce. And what do? We broke it multiple times. Then the next swing point is right here. If we break this level, this is that level I'm watching. If we break that level, you could see trouble. And that's why I'm seeing weakness coming into that stock. Every time we get a bounce, we get lower highs in this stock. And that's why I say we get weakness. The other thing I'm watching is I'm looking at these swing points. So if you know Fibonacci sequences and you took the green course and we draw this fib level and we zoom in, you know that, what do I always say on a retracement? We can go 50%, no problem, and then continue on the trend. So right here we had a bounce of 50%, and now what are we doing? So you can see every time we're making these bounces, we get a further rollover. We get a bounce, we get a rollover, we get a bounce. What do you think is going to happen? That's the normal healthy pattern of the stock, is to continue there. Now, can it change? Yeah, absolutely it can change. But this is to show you where my theory and concept was based on and based from. We can, of course, still fill the gap and then roll over. But right now it didn't even get a chance to get and fill the full gap. And I posted this here on May 26th, and I said we'll probably fill the gap, or we got to the 100 mark and we roll over. And when we look at this on Twitter, you can see that right there on Twitter, it may attempt to fill the gap at 103.90 and then roll over, still popping on weak volume. Okay, so again, a lot of information in there. Why do I say weak volume? Okay, this move, some people may consider it strong volume. Other people may consider it weak volume. Why do I say weak volume? Well, when I compare it to the previous volume, I look at it, and from experience, I see that it's weak. Some of the key things that allow me to spot this as weak is, just to make things easy, let's just go to the weekly. And I can see that this bar right here is 349.2 million on the weekly. 349 million. Think about that. If you put this in candy perspective, or ants, or $349 million, this is really the amount of shares traded. But think about it, 349 million to the downside, and here we're trying to pop on 204 million. The difference here is an extra 150 million more people on the downside. Not people, shares, of course. I'm just saying people as a relative concept visually. It's tough to imagine a share of stock. But if you look at people lined up, an extra 150 million people lined up, that's a big difference. And that now starts to visualize things a bit different. So you can see that that's why I look at this. But when you look at a social media concept here, as we start getting into the inbox, and again, this is not to criticize the people that, post and interact on social media, because it's there to interact, it's there to be social, and you're there to learn. So that's perfectly okay. Just understand that they see things differently. They're looking at different things than what I'm looking at. So that's perfectly fine. And there's no need for me to continue the interaction, because I already know that I know what I know, and I understand what I'm doing. Whereas, in order for me to explain to everyone what I'm doing here on social media, it would just take up so much time. There's just not enough time. So here, when you look at it here, right after I posted this tweet, let's not ignore the 5 and 7.5 million blocks that were bought at 99.16, and then a huge ensued. Okay, so basically here, the 5 and 7.5 million blocks that were bought at 99.16. And if you look at it, really this person is talking about day trading, because when we're looking at it here on a daily chart, you can see that here we're already talking about 38 million, 35 million per day. So when we zoom in here on, let's say, the 30-minute, and we go to the 26th, here's the 26th, and here's the 6.2 million that they're talking about. Maybe if we go to the hourly, let's just see the hourly. Here they're talking about 9.3 million. So I would imagine this is the block of volume they're talking about, but this is the fake out. I know the bigger picture. Remember, we've already looked at the bigger picture of this stock. So what happens to this stock? We get an exhaustion and then we roll over. And now we're continuing that roll. And look at this influx now that's coming in of volume into this stock. It's because of the other previous overhead supply. So, so this person was looking at it strictly from a day trading perspective, because when you look at it on a daily basis, we're averaging 30 million, 50 million, 35 million, 38 million. So when we look at it here on a stock twits, let's not ignore the 5 and 7.5 million blocks. So again, I already know and understand right away in my mind, if he's talking about 5 million and 7.5 million blocks, boom, I know he's a day trader. Right away, I know they're looking right there at the day trading. And for me, I'm not looking for pennies. That's not the game. And when you look at it and you zoom in here at the 99.16 mark that he's talking about, that's all right here. That's all right there. You can review it. It's the charts. So, and that's okay. There's no need for me to criticize, to comment about it. That's just the way they think, and it's not my thinking. So my goal for you in this lesson is to understand that other people think differently than what you're thinking. So stop letting them influence you. Next comment regarding this, again, not buying it here, but over 50 million shares traded is not what I would consider weak volume. Again, he mentions not what I would consider weak volume for him. Okay, and I don't know how long he's been trading. He's intermediate, so maybe he's, has some skill sets behind him. I don't know, but 50 million is not what I would consider weak. So let's look at this 50 million that we're talking about. So again, we're on the daily here. He's talking about this massive bar right here, which is over the average. Our average here at this point is 44 million, 44.5 million, and we're averaging 56. So to him, that's massive volume. But to me, when I look at the previous chart here, this previous chart on the daily, what's overhead, what's above that price, what's pushing down. Think of this as like Shaquille O'Neal pushing down on you. What's above it? He's pushing 114 pounds of pressure, 114.6 million shares traded to the downside, whereas here you have 56 million pushing up. So think about it, 114 million pounds or 114 pounds pushing down, and you only have 56 pounds of pressure pushing up. Which one's going to win, right? So you got to think about it that way too. So again, go into the weekly, you see the bigger picture, okay? And you look that on the weekly, it's barely hitting that average, okay? But to him, on a relative trade, he's this guy, I would assume he's a swing trader, which is what, when you look at the profile, it says he's more of a swing trader. But his swing trading is a little more, I would say, a tighter swing trader, because in swing trading, you still have more of a day trading swing trader. So you might have a multi-day swing trader. You might have a multi-week or a monthly swing trading. So you still have different levels of swing trading in terms of time. Okay, again, not to criticize this person or anything like that. It's just simply he trades differently, and that's perfectly okay. And he's free there to make their own opinion. But my goal, again, is to share with you that when you're looking at this, a 50 million here that someone says, and now you may get sucked in thinking, yeah, that's huge. He's right. And, if you trade exactly like him, and you're doing things exactly the way he is, and you're a clone and a replicate of that person, then yeah, you would see things exactly the same way. But here, for those of you that have studied with me, followed me, you understand I look at the bigger picture, and there's a reason for that, because things can get torn right under you. The rug can get pulled right from under you. And the bigger picture here, as you start looking at things, okay, you start evaluating things, it allows you to see things a little more clearly sometimes. So for me, in this perspective, me and him, that person, we're not a clone, we're not a we're not the same. I see it as this stock still having weakness. So for me, would I rather go short or long this stock over the next week? I would rather short it. So if I look at it that way, over, let's say, the next 10 years, if I was to hold it or hold it short for the next 10 years, I'd probably rather go long, because over time, the value, you would assume the company grows. So again, it's all about relative to your time perspective. And looking at this first gentleman here, or this first person, we know he's a day trader based on his 5 and 7.5 million blocks. The other one is more of a shorter term swing trader. So again, you need to define for yourself, when you're looking at charts, how things are relative to you. Are you more of a swing trader, a day trader? But then within that, are you holding positions for a little bit longer, a little bit shorter time period, and then evaluate things? I personally would recommend you look at things at a longer time perspective, because look, a stock can go up for many, many years. Now, do you want to try to capture everything you can in 6.5 hours? In 6.5 hours? And you want to make trades, and you want to pay more commissions, and you want to, be focused on the screen and sit on the screen? Or would you rather buy the right stocks at the right time, allow them to run, and enjoy your time? You enjoy your time freedom. Go on a trip, go on a vacation, do what you want. Go read, go to the pool, take a walk. Or do you want to be glued to the screens? Again, up to you. It's different. It's a different type of personality, and there's nothing wrong with either one of those. It's just you need to understand how social media will impact your decisions, is that they are different. There's a lot more, especially now, there's a lot more real-time things that happen here as we get into, all these different things. You get to see things happening more real-time, and people filling in their real-time ideas, but very few will share the longer term, bigger term view on the market. So it's hard to dissect exactly who's doing what unless you're asking a lot of questions. So don't be scared to ask a lot of questions if you're on social media to really understand a person. If you're following, the 3 to 5 people, I'd say that's more than enough. If you're, brand new to trading, that's a good way to get started and kind of build your awareness. But if you're actively trading and you're new, I would say you need to close this down and maybe follow 1 or 2 people at most, because otherwise you're going to get confused. This is like trying to find the right grain of sand in the desert. It's so difficult because you look at all these different traders with their ideas. I keep scrolling for days, and there's so many ideas, and you need to filter those things out. So for me, I kind of just skim it from time to time, if I look at it in case somebody messages me. But other than that, I don't even look at this. This is not something I look at. I simply will post my chart, on the outgoing. And if some people reply and they like it, they don't like it, then by all means, great. If somebody has a question, that's when I really reply back to them. So if you have questions, go ahead and just, reach out to me. You can do so on Twitter, Critical Charts. This is also where I post a lot of the alerts or things like that, like for the new Critical Charts posted. I'll also post some new goodies and things that happened. Like, for example, this free book that we launched this last week for this 20 Rules for Investing Success, which we will be getting out that PDF here this week or next week. I have to see if we finish it up or if it's finished actually after I finish recording this video. And then we'll send it out. So that's the thing, is that we're watching all these. If you're watching stock twits or Twitter, follow 1 or 2 people, whoever they are, and see how they relate to your style. If you can relate to them, great. Use it, make it your own, get better, and use it to just continue to improve your trading. And then you can use that to improve your account and improve your life. So, but it's really just a point or area to learn from, but it can be very detrimental if you don't understand that there's just so much information that can really be confusing. And especially if you're new, don't get sucked into that with information overload. Be very, very, very careful because there's just so much out there. So you need to be able to filter that and put on your blinders and hone in at the right things so that way you can continue to get better. All right, thanks again for joining me. I hope you enjoyed this lesson. That's just my thoughts on social media, how you can use it. Just ask a lot of questions if you're following someone to understand what they're doing, to understand where they're getting their trade ideas, why they're selecting the trades that they are. If those people that you are following, they have a book or a blog, then go ahead and read that blog and really get inside their head or watch a few of their videos, because it really allows you to connect on a deeper level and really understand them even more, because then you really just get some insight to how their brain and mind thinks. All right, so thanks again for joining me. Hope you found this video helpful and insightful. Remember, do what you love, contribute to others, but most importantly, live life abundantly.